please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. The market is up almost 80 points and it's looking pretty good, 10,570. It's almost been an absolutely calm kind of session. No up and down, no hint that the market is going to sell off. Almost Zen-like state, 70 to 80 odd points. That's essentially been the moves that, so as to speak, on the Nifty, so to speak about. You talk about real estate, autos, private banks. Those are essentially some of the top gainers as far as the sectors are concerned. News flow, of course, has been kind of thin. There is, of course, all the cases with IBC which are going on. There's this Daiichi Fortis case. Fortis, of course, saw a large 13-14% move before closing about 10% higher on Friday. It's been a little weak, and there's news at the bottom of the screen, which we will address in just a bit. But let's begin the show with the headlines as always. With me is my colleague Sumaira. Sumaira, afternoon.
Hi Prashant, good afternoon to you as well. And quickly, let's also take a check first on how the European markets have opened. Expectations were that the market would open a bit on the higher side given the Wall Street close on Friday. So just a tepid sort of start, but at least in the green. The key monitorable now for the global markets will be Fed Chairman Jerome Powell's speech. And also on Thursday, the core personal expenditure, core consumption expenditure, which is what the Fed monitors in terms of inflation, that will be released.
85 points. Actually, as we were talking from the time that we started at 1:30, the markets jumped a little bit more. Yes, it has. So now 0.8% higher. Ashwani Gujral is with us as always on the top of the show. Ashwani, thanks very much. How do you assess the market now?
See, I like today's rally much better than Friday. Friday was first day. It was a given that you'll rally, close at the highs, etc. But today we haven't given back anything despite it being the second day. So my sense is that as we go into the close, even the stubborn shorts are likely to throw in the towel, and particularly there is extremely strong buying on private banks, and that seems to be a trend which is emerging, that private banks, private NBFCs will now see outperformance over their government peers. So that way I think we still have some ways to go, and from here also you could make some gains. As far as individual stocks are concerned, Bharat forges a buy with a stop of 760, target of 795. Jet Airways a buy with a stop of 766, target of 784. And Reliance Capital is a buy with a stop of 480, target of 505.
Okay. So, on the Nifty, are we past the level till which point you'd sort of be a little nervous and say maybe this is just a pullback which we'll get again sold into, or some more distance to go before we get that confidence?
How you approach a certain level, that is a lot more relevant. While that level is 10,600, 620, but the way we are going there, with strong banks leading the move, with Nifty making back-on-back gains, I'll be very, surprised if 10,600, 620 holds for a long time. There may be some mild profit booking, but the way this thing is going, I would think that maybe that level starts to get taken out, because these days what happens is there's so much media flow, information flows so fast that everybody acts at the same time. So, sometimes there is no other leg. So in case 10,600, 620 starts to get crossed, then people should assume that whatever correction has happened, that's it, and no more is happening. So we are betting that 10,600, 620 may get crossed on the upside this time.
Ashwani, thanks very much. Appreciate you joining us and running us through what you make of the market. Your trades, of course, came up earlier as well. There's news on Fortis. So the Delhi High Court has attached all assets of RHC Holdings and Oscar Investments. The Delhi High Court is restraining RHC Holdings, Oscar Investments from working bank accounts. So they're saying that RHC and Oscar Investments can operate bank accounts for salary and statutory dues. But that's about it. You can't do anything else beyond that. This one more news flash: RHC Holdings figures in list of high-risk companies released by Finance Ministry, which we've been sort of tracking and putting out earlier. we've been sort of doing it through the course of the day since the morning. And they're also asking the Singh brothers to present a list of unencumbered assets before them. The Singh brothers have told the High Court that the list of assets submitted as of February amounts to a total number, amounts to about a little over 3,000 odd crores or so. And, that assets need to be valued and liquidated. This is, of course, pertains to the Daiichi Fortis case. Sriram Subramanian is founder and managing director of InGovern. He's joining us right now. InGovern also put out a report last week, making some damning conclusions with regards to this entire Fortis saga. Mr. Subramanian, thanks very much for joining us. But if you could just quickly first react to what's coming out of the courts right now. I read out some of the points which are coming through.
Good afternoon. Yes, I think the Singh brothers need to recognize that that arbitration award vis-a-vis Daiichi is a real amount, and they have been trying to fight it in Delhi High Court, and they went to Supreme Court, and they need to pay that amount. So there is the more they delay, the more there is going to be a push from the courts to pay and settle that amount. So I think they have been knocking at the courts, and the courts have been against them and have favored Daiichi. So that liability is something that is that needs to be settled by them, and that is where the biggest bugbear for them is.
But is it? That was already in the that was already going on, right? That process was working its way up the courts. So is this a step forward in that direction?
Yes, I would think so, because till last week, till they approached the Supreme Court, I think they had recourse to the courts in India. And once the Supreme Court said that the Delhi High Court order will stand and they will not meddle with, they will not rule on it. So I think any course of recourse within India is closed out. Subsequently, there were some news articles or the Singh brothers saying that they may approach the Singapore courts. But at the end of the day, I think the arbitration, because it was arbitration done in Singapore, so I think the courts in Singapore also may not have so much of a jurisdiction and may look at the arbitration award favorably for Daiichi. So I think at the end of the day, the court route is closed out for the Singh brothers also, and they would need to pay this today or in the near future. And I think this is where that even today's news that you are putting out now sort of comes to the fact that even their assets will be attached to pay up that amount.
Okay, Mr. Subramanian, if I can request you to hold on. We also have eminent lawyer, Mr. H.P. Ranina, who's joining us right now. Mr. Ranina, thanks very much.
Yeah,
if you've been watching the screen or you're hearing the conversation, the Delhi High Court essentially asking the Singh brothers to maintain status quo and assets till further notice. Does this take things forward? Because this case, as I was saying earlier, was already working its way up the courts.
Well, it is just an interim order that have the status quo, don't dispose of the assets till they finally hear. This normally happens in courts in India. So I think it's just a procedural issue. We have to wait for another few days for the next hearing. But until the court gives its final decision, obviously all assets will be frozen and they cannot be disposed of. That's a normal expected, it's on expected line.
Does this have any bearing then on with regards to what happens to the asset sale Fortis? Because that's also
that will be affected. That will be stayed. I don't think that will go through. So until the court finally decides on these issues, all the sales, everything will be held up.
Okay, Mr. So let me just put that to Mr. Subramanian as well. Does this, as I asked Mr. Ranina, affect the sale of Fortis as well?
No, I think, as of today, the liability is that of the Singh brothers, and they own only 3.6% of the shares of Fortis. So I don't think that by itself will affect the ruling. So maybe this 3.6% shares they may not be able to sell, but we'll have to see how it pans out and whether investors will also bite the bullet.
Mr. Ranjana, where do you see this the Supreme Court, as Mr. Subramanian pointed out, has also already sided with the Delhi High Court's view on this matter before. So do you expect this to drag on, or as Mr. Subramanian was saying, that, I mean, it's coming to a point where there's little, recourse from courts left at least. I mean, they'll have to pay up basically.
Yeah. No, I think the matter will not drag on for too long. What will happen is that before the vacation, in May, I think the court will give some decision. And and those who are the forties, if they want, I think they may seek some clarification. That's the best thing that they can do in order to, make sure that there are no hassles in future. So I think the matter should be resolved in the next few weeks, definitely before the court breaks for vacation.
Fair enough. Let's hope so. Mr. Ranjana, thanks very much for joining us. Mr. Subramanian, appreciate you joining in and staying with us with that perspective. So there is news flow on Fortis, which is coming through. We'll track that with Ashmit, our colleague from the courts as well, and maybe get you some more details and fine print of what's really gone on there. The market, I must say, is up 90 points now. When we started, we had about a 70-odd point gain. So in the last, 12, 13 minutes, the Nifty has added another 20 points, and we are basically at the day's high, 10,581. So this is definitely a leg up that we're seeing in the broader market. The Midcap index is up 0.8%. That's about 160 points.
Markets holding up. So let's get in some more corporate voices. We have Mr. Ramesh Iyer, the Vice Chairman and MD of M&M Financial Services, who now joins in. Mr. Iyer, good afternoon. Thanks very much for speaking with us. Now, Q3 was supposedly one of the best quarters that we've seen in terms of profitability and growth for your company. Can you continue with this momentum now in Q4 and perhaps FY19 as well?
I think it's important to understand, and this is our take, I guess rural is growing better than urban at this stage. And this has happened after maybe 18 months to 2 years of tough times that we've gone through, and we've seen last 3 quarters things have opened up. And I've always said that in rural, NPA is just a number and which is a regulatory requirement. And we don't think that all NPA ends up into not being collected. So therefore, the profitability is an outcome of how much do you recover from your provided customers, and therefore how does it add to your profitability?
Mr. Iyer, can you still hear us, sir? Okay, maybe you want to try.
Okay, so just to talk about disbursement growth, I mean, if you can hear us, on a normalized basis, could you talk to us a little bit about that? Where do you stand and what's the outlook?
I think it's important to understand in the previous third quarter numbers, if you kind of look at, you have October, which has both Dussehra and Diwali, or maybe October and November as Dussehra and Diwali. This year, if you kind of look at it, the Dussehra went into September. I think it's important to look at numbers on that consolidated basis rather than just look at one quarter. And therefore, the September numbers were so very different from what it was in the past. And since you miss one festival, and especially if you look at a festival like Dussehra in rural, it's a very large volume month. And that is what would cause these kind of a dip, if you may think so. As otherwise, I think in every quarter we have had 1 month which has registered even 20% plus growth. So I would think a 15% average for the 9 months that we've seen is something which is more stable.
The other important item is asset quality, which has improved for you in the last quarter. What is the guidance?
So I must clarify one thing very, very clearly, which is, as a company, we have not rescheduled even a single contract ever. And therefore, whenever you see improvement to our NPAs or collections, it will always be out of collections made. Right? And in this round, we're not even resorting to repossessions of vehicles because we do see the use of vehicles are pretty good. The economic viability is improving and the consumers are therefore coming forward to repay on their own well. So overall, the collection efficiencies have been very good. All 9 months, if I speak, this has been 1 year after a very long time where every month the collection efficiencies have been higher than 90% plus. So I must tell you that the improvement to asset quality is a direct outcome of collection efficiency improving. And as a company, we moved into 90 days in September, whereas we had time to move up to March. And normally for rural, first, second quarter is not great quarters, but we took that view and moved in September to 90 days. I think that's indication enough to kind of say how the collections are improving.
Mr. Iyer, in a rising interest rate scenario, how is your borrowing mix placed in order to maintain your NIMs going ahead?
So let's be clear, interest rate, ultimately what's an NBFC? We are just an intermediaries or an enabler, right? Therefore, the cost will have to be picked up by the ultimate consumer. At what stage you pass on the cost is a decision that different NBFC would make at different points of time. But I think all of us have phenomenal lending power, right? So the pricing power is very high. And we have always believed that an NBFC must price the risk and cost appropriately to consumer. This is not a market share buy game. And therefore, whenever there is a cost increase that happens, you need to decide what's an appropriate stage. I mean, let's look at last 6 months plus. The interest rates were falling, and not necessarily that every NBFC would have dropped rates substantially. And therefore, if the interest rates were to go up in the next 3 months, maybe we will not even increase the interest rates. But then over a period of time, we will look at the yields at which we want to operate. And then at an appropriate stage, when we think that it's necessary now to pass on the interest rate, it will get passed on. The net interest margins, in my opinion, are not likely to suffer just because you see some interest rates moving up.
Okay, Ms. Iyer, just one final question then. Earlier there were these talks of Kotak Bank, which was looking to acquire some stake in M&M Financial. Have there been any moves, or are you looking for any sort of inorganic opportunity?
We just raised capital and through a QIP format. So I don't think we are looking at any strategic partner, at least in the main business of the vehicle finance business or an SME business that we run in MMFSL. But yes, we have a subsidiary which is a housing subsidiary or a mutual fund subsidiary or an insurance distribution subsidiary. I think those will be very clearly viewed as an opportunity if there's someone who's looking at India as an interesting story and then they want to come and participate with us. But then we'll be extremely sure and careful that they must have the same strategic mindset to go into rural. We're not looking at someone who will partner us and say, can we do business in urban? I think that's not our game. As far as looking at opportunities in the market space is concerned, again, it has to be a product line which is in our strategic mindset. The cultural fit is extremely important, and we do not want to engage and take over any company which then gives us a problem larger than that we already have. So I don't think that's going to be our approach. So we will have two-pronged approach. One, is there an whole setup available, and therefore what are they bringing on table? Two, could be even a portfolio purchase if somebody wants to downsize their portfolio. Are we looking at some of them? But again, that should be a business line that we are interested in.
At 90 points, holding 10,581, which means we're not very far away from the day's high. Let's get you a CNBC TV 18 exclusive. Archana Shukla, my colleague, caught up with Nilesh Gupta on the sidelines of the Farmer Forum and began by asking him about the generic farmer market. Let's listen in to a slice of that conversation.
I'm of course concerned, because I think what you don't want to happen is you don't want to, Sanders announced that they're going to get out of products which they don't see profitable. Teva has moved so much away from generics as well. You don't want to see that. You don't want to see good established players moving out because they also have good quality systems that are built into place as well versus 50 new entrants that came in. Like, obviously, not all of them have the same quality standard as somebody who's been inspected 50 times. So I think that to me is a concern. I think it's more a concern on the outlook of the market. Obviously, you'll have heard this from the big generic companies. Everybody's moving down the path of complex generics. They're moving down specialty as well. But I think there's always going to be 15, 20 oral solids that you will do every single year, and you want to be able to make meaningful return on that. I don't think anybody's looking to excessively profit from that, but you want to be able to make meaningful return. Otherwise, someday somebody's going to ask the question, why do this?
Yeah, also talking of the big companies that have put their assets on the block, would that be something that you would be looking forward to?
Yeah, no, so we're not looking at it. So we're not looking at inorganic moves on the generic side at all. I think we have enough and we have all the DNA that we need. Our acquisitions would focus on technology or on specialty.
In the US side, till when do you think this pain as far as pricing pressure will continue?
I think it's here to stay. I think the pricing pressure is here to stay, and honestly speaking, I think the market is moving to more paving the way for making sure that there aren't that many exclusive generics that there are out there. So I think as companies, so our strategy is to focus on true complexity, to focus on truly high barriers of entry. I think that'll ensure that you have a sustainable growth model.
Hi, the market, well, pretty much at the high point of trade. So we'll wrap up on Midcap Radar. Your stocks comes up next. We'll take